Hello, and welcome back to Freedom Ain't Free. In today's video, we're going to be talking about qualified plans and why that strategy no longer works to get you to financial freedom. This purpose of this channel in general is to help you to have a clear of understanding of how you can break free from the current system that's designed to keep you working and to keep you in bondage. We wanted to create a channel where we're going to focus our attention on helping people get free. And true financial freedom comes from having investable assets that generate income for you year after year. Our goal and our objective is to share with you strategies that's going to help you develop a $2 million investable asset portfolio that will spit out $120,000 to $160,000 a year. We also want to make sure that you have all of the wisdom, knowledge, and understanding of all the financial tools that are available for you to accomplish that goal. And here at the Freedom Ain't Free channel, we want to make sure that you have all the knowledge that you need to get there and accomplish that goal. My name is Joel Huey. I'm the principal at ARC Financial Strategies. We're a registered investment advisory firm located here in Richmond, Virginia. The focus of our practice are to help work with high earners that are not rich yet. We call them Henrys. High earners, not rich yet. Yeah, we've got the income to get us there, but now we need the strategies, now we need the skills, and now we need the tools. At ARC, we help those clients accomplish that goal. And the first step that we do is we provide them with what we call their freedom number. That's the amount of money that you need to save on a monthly basis to get you to that $2 million investable asset portfolio so you can be free. What does freedom mean? Freedom is you control the time, you can control your location, you can control your own individualized destiny, right? That's what we mean when we say free. So we want to give you all of the tools that you need in order to get there, and that you can focus your attention on the things that you're passionate about. Whether you're working for somebody else right now, and you're working on their dreams and their goals, helping them to accomplish what they want, or you're a business owner and you're working on your own dreams and your own goals, we want to make sure that you have everything you need to be free so that you can focus your attention solely on the things that you're passionate about. With this channel, we're going to take you through the 7 steps to financial freedom. And we believe here at the Freedom Ain't Free channel, if you focus in on these 7 things, that you will get to that $2 million investable asset goal. The first thing in the 7 steps is knowledge. You got to understand how all the financial tools work. So we're going to give you the wisdom, the knowledge, and the understanding of each one. Number 2 is improve your cash flow. You got to know where your money's going so that you can make sure it's going in the direction that you want it to go. You've already figured out how to get to a significant amount of income. Now we need to control that income and control that spending to get you free. Thirdly is we got to get you out of debt. Got to reduce the debt. Yes, that's what this channel is about. Debt is what's keeping you from being free. Look at your personal budget. If you didn't have the amount of money going to debt, what could you do with that amount of money if you put it towards your investable strategies, right? You could buy your freedom. We want to show you strategies to help you get completely out of debt and reallocate those dollars to buying your freedom. Number 4, we're going to help you reduce your taxes, right? The biggest part of your bill, the thing that's dragging you down the most is that 40% that you're spending in taxes on an annual basis. We're going to show you strategies to reduce that. Next, we got to show you how to minimize your risk, right? You have various risk factors that are coming against you, and we want to show you how to minimize those risks. And then finally is your freedom number. I want you to understand that once you know what your freedom number is, it helps you with all the other steps in the process. You're going to put yourself in a position where you can control your spending better because now I know if I save X amount of dollars per month, I don't have to work anymore. Now I know if I save X amount of dollars per month, I don't have to live in this neighborhood anymore. Now I know if I save X amount of dollars per month, right, that I can break free and I can work on the things that I'm passionate about, whether that's writing books, whether that's working in your church, whether that's working in your community, whether that's working with kids. Whatever it is that's passionate in your heart, that's passionate in your spirit, we want you to spend all of your time working on that. And we know that if we can get you financially free, you can become that person that you always wanted to be. So here on the channel, we're going to give you all of that knowledge. So today's video is about qualified plans and why they no longer work. And so we're going to take you through all of the different options in the qualified space. We're going to talk about each one of them in detail, and then at the end we're going to wrap up and kind of give you why these strategies are no longer getting us to financial freedom. So the number one qualified plan strategy we want to talk about today are 401ks. 401ks are generally employer-sponsored plans, generally speaking with companies that have 100 employees or more. There is such of a thing as a solo 401k, which is for an individual self-employed person, but 401ks in general all work the same. Your employer may or may not offer you what is referred to as a match. What is a match? That means if you put in $1, the business, your employer, matched you and they gave you $1. In other words, they gave you, that's right, free money, right? We do want to get all the free money that we can get our hands on. 401ks typically come in two different strategies. Some employers give you the option between the two. The first is a traditional 401k, which is a tax-deferred strategy. What does that mean? That means you put in $1 today. You did not pay tax on that $1. You invested that $1 and you made another $1. Now you have $2. At some point in the future, you're going to have to pay tax on both dollars, right? That is a traditional 401k. The second option is a Roth 401k. Roth is simply the senator who got it approved. It's not an acronym for anything, but it is a tax-free version of the 401k strategy. What does that mean? That means you already paid tax on the $1. You invested $1, you earned a gain on the $2, and you never have to pay tax on the gains again, right? So that strategy is giving you the ability to get money out of the tax system. We're going to talk about that as we conclude today's video. The second type of qualified plan we're going to talk about is a 403B. 403Bs are typically for school systems and nonprofits. They work just like 401ks. They're just for school systems and nonprofits. What I want you to understand is all the qualified plans that we're going to be talking about today are not investments. I'm going to say that again. All the qualified plans we're talking about today are not investments. These are simply IRS codes that let the IRS know how to tax you on the gains that you get inside of the plans. You still have to pick the stocks, the bonds, or the mutual funds to actually invest your money in. The plan in and of itself is not an investment. The stocks, the bonds, the mutual funds, the real estate, those are the investments that are actually growing your money. What the code says or the qualified plan says to the IRS is when can we tax you on this money. So if you work for a school system or a nonprofit, you have a 403B, works very similar to a 401k. The third type of qualified plan we're going to talk about is a 457B. These are typically for government or state and local government organizations. They have the designation code of 457. Works just like the 403B, works just like the 401k. You're going to choose your own individual stocks, bonds, or mutual funds to invest your money in. And at some point in the future, when you start to take money out of this plan is when you're going to pay taxes. The next qualified plan I want to talk about is a SEP IRA, which stands for Self-Employed Pension, but it is also basically an individual retirement account, right? These are for self-employed people or people with very few employees. This strategy is really basically an IRA strategy. Works very much just like a traditional IRA. You're going to save the money in a tax-deferred way. When you get ready to take the money out down the road, you're going to have to pay taxes on that plus your gains. The employer might match or might not match, just like the employer in the 401k, 453, and the 457 strategy. They may give you extra money. They may not give you extra money. Typically, SEP IRAs, because they're for self-employed people, typically have a match because the owner wants to get additional money into the plan for themselves. At some point in the future, remember, you're going to have to pay taxes on the $1 you put in, and you're going to have to pay taxes on your gain. Next qualified plan we're going to talk about is a simple IRA, right? Simple IRAs are typically for a little bit larger companies, but who still have fewer than 100 employees. Most of the time, you're going to see 401ks, 403Bs, and 457s are for organizations that have at least 100 employees or more. So a simple IRA is for an organization that has more than a few employees, but hasn't got all the way up to the 100 employee mark as of yet, right? Again, works the same way as the 401k, the 403b, or the 457. The SEP IRA, the simple IRA, same thing. It's a tax-deferred vehicle, which means I had $1. I did not pay tax on the dollar. I invested the dollar. I made another dollar, and at some point in the future, I'm going to have to pay tax on both dollars. That is a simple IRA qualified plan strategy. The next type of qualified plan we want to talk about today is a defined benefit plan. So defined benefit means that at some point in the future, you are getting a guaranteed paycheck. That typically is referred to as a pension. So your employer says, if you work for me for a certain number of years, I'm going to guarantee you a paycheck for the rest of your life, right? That is a defined benefit plan, right? Some employers will allow you to contribute to the plan. In some instances, they contribute the entire amount, and then from there, they give you a guaranteed check. You will have to pay taxes on the entire amount that you receive because you've never paid taxes on those dollars, okay? That is a defined benefit plan. Typically, you would not put any money in. Sometimes you will, and then they'll add to that. But most defined benefit plans, the company funds the entire strategy for you. The last type of qualified plan we're going to talk about today is a traditional, or an IRA, which stands for an individual retirement account. Comes in two variations. There's a traditional IRA, and then there's a Roth IRA. Traditional IRA is a tax-deferred strategy. That means you had $1, you invested the dollar, you made a profit, and you didn't pay tax on either. When you take the money out in the future, you're going to have to pay tax on the entire amount. The Roth IRA is the tax-free strategy, which means I had $1, I invested the dollar, I already paid tax on the dollar, and then I'm going to get a gain, and I never have to pay taxes on the gains again, right? Each one of these strategies has limitations. Each one of these strategies, you are generally responsible for picking the stocks, the bonds, or the mutual funds inside of the strategy. That is how two individuals can work at the same place, make the same amount of money, invest the same amount of money in their qualified plan strategies, and come out with completely different results when they get ready to retire, because it's all about what stocks, what bonds, and what mutual fund strategy you actually chose in order to get you to your ultimate goal. And remember, here at the Freedom Ain't Free channel, I don't want to work. I need $2 million in my investable assets, spitting out $120,000 to $160,000 a year, so I don't have to work anymore. So the choices I make in my stocks and my bonds and my mutual funds are going to dictate how quickly I get to that $2 million strategy, or if I ever get there at all. So we want to encourage you to look at your 401k or your qualified plan strategy. Look at the rate of return that you're getting on the investment choices that you made, and maybe get that reevaluated so you can get a better piece of performance, right? So now, I told you the purpose of this video was to talk about qualified plans and why they no longer work. So I have to educate you on when they were put in place and why they were put in place. So in 1979, 1980, Ronald Reagan was running for president. At that time, the highest tax rate we had in our country was 79%. That was the top tax rate we had in our country. Based upon where we currently are under the big, beautiful plan that the Congress just put into law, the highest tax rate in America right now is 39%, and that tax rate is set on a permanent scale. But if you understand anything about our government, you'll understand first and foremost that the only way our government can create revenue is through taxation. Therefore, is there any way that our tax code is permanent? Of course not. Why? The government is also the largest purchaser of goods and services in our country. Therefore, if the cost of goods and services is going to go up, and the government's only way of generating revenue is through taxation, then at some point in the future, the government is going to have to do what? Raise taxes, right? So if we understand that, and if you're saving money currently at the 39% tax rate or lower, and you know that some point in the future tax rates are going to be higher, what does that mean for your investment strategy? That means that they're going to take a larger chunk out of your qualified plan strategy down the road when you're ready to pull money out. This is why this strategy no longer works. Well, if you were started working in the 80s and tax rates were 79%, and now you retired and tax rates are 39%, that strategy worked, right? You're now taking money out of the strategy at a lower tax rate than you actually put the money in the strategy, right? So we have to understand where our qualified plans work in our overall strategy to get to our $2 million goal, right? So if we're going to have to pay more taxes in the future within that strategy than we do now, we have to make sure that we are evaluating the risk inside of that strategy. And that strategy now has to accomplish taking care of 3 risks. Risk number 1 is it's got to outperform the increase in taxes. Risk number 2, it's got to outperform inflation, which is where the stuff is going to cost you more in the future than it does today. And then thirdly, it's got to perform at a higher rate of return to get you to your $2 million portfolio in the time frame that you have set up to work, right? So understand you got to manage all 3 risks. Understand that your investment portfolio inside of your qualified plans got to handle all that. That's why I say those strategies no longer work. Now, I understand what you're going to say. Joe, don't those strategies include some tax-free options? Yes. There is a 401k, Roth IRA tax-free, or Roth 401k tax-free strategy, but most employers do not offer it yet. There's also a Roth IRA strategy that you can own individually, but there are limitations. If you make more than a certain amount of money, you cannot invest in a Roth IRA. And so those strategies have limitations. Most people that are high earners, not rich yet, are forced to work with the qualified plan strategy to get enough money in the strategy to be able to get to the $2 million portfolio. So we've got to maximize those strategies, and then we have to look for alternative strategies that are outside of the tax system in order for us to get most of our money of our $2 million portfolio in tax-free options, not in qualified or tax-deferred strategy. So here at the Freedom Ain't Free channel, we're going to walk you through all of the different strategies. We're going to give you all the wisdom, knowledge, and understanding of every tool that is available in America for you to use. We are not limiting anything out. We're going to talk about everything. We're going to talk about insurance. We're going to talk about investment strategies. We're going to talk about oil and minerals. We're going to talk about currencies. We're going to give you every strategy that is available. We're going to break them all down individually in 20 minutes so that you will have the wisdom, knowledge, and understanding that is necessary for you to get free, right? And we want you to be able to be the person that you want to be. We want you to be the person that God wants you to be. And in order to do that, I need to break you free from working for somebody else, break you free from your business so you can focus your attention on whatever it is that you're passionate about. Thank you so much for joining us on today. If you want more details or more information, or you want to schedule a one-on-one free consultation with us, the link is going to be in the video. We'd love to set a time to share with you so we can get you your freedom number. We're going to do that for you completely free. Schedule a consultation with us. Get your freedom number. Know exactly how much money you need to save on a monthly basis for you to break free. That is our goal here at the Freedom Ain't Free channel. We thank you so much. We'll see you next week where we're going to dig into more of the 7 steps. We're going to talk more about the knowledge step, and we're going to talk about the tax-free options that are available to you in the investment space. Once again, my name is Joel Huey Sr. Thank you for joining us on this episode of Freedom Ain't Free. We'll see you next week.